Hi, I'm Veena Jetti. Everybody knows that 90% of millionaires made their money by investing in real estate. Today, we're going to talk about an asset class that you might not have been considering before, multifamily assets. Today, I want to go over 6 reasons why multifamily is the best asset class to invest in. Today, we're going to talk about why multifamily is the best asset class to invest in. If I asked you today if you have multifamily in your portfolio, you're probably going to tell me you don't. Well, what are the reasons that you don't? Because you're intimidated, it's overwhelming, you don't know where to start, you think you don't have the money. Well, today we're going to dispel some of those myths and we're going to talk about the 6 benefits to investing in multifamily real estate. They include things like lowering your risk, increasing your return, and really making the most out of your dollars. So we're going to talk about what multifamily can do for you, how you can scale your portfolio, and how you can get started too. So if I asked you what assets of real estate you're interested in, there's going to be a lot of assets that you are considering. There's many ways to make money in real estate. You could be in commercial real estate, doing office, industrial, warehouse. You could be in self-storage. You could be invested in assisted living facilities, single family homes. There's so many ways to make money. And multifamily is obviously my chosen asset class. And I will say that I have invested in many different asset classes. I currently am invested in many different asset classes. But as an active investor, I focus solely on multifamily because it has some of the best risk-adjusted returns. And what I mean by that is you can take the least amount of relative risk and get the highest return for your dollars. Now, one of the things that I want to make sure that we review in this are all the myths that surround multifamily and not knowing how to get started in this asset class. Whenever someone's investing in real estate, one of the biggest concerns that come up is with your occupancy and your vacancy rates. And one of the benefits of multifamily investments is that you actually are lowering that risk. So for example, if you have a single family home and that single family home is vacant next month, your tenant moves out, all of a sudden you're at 100% vacancy and 0% occupancy. But in a multifamily asset, let's say you have 100 units and 10 of your residents move out next month. Now your vacancy is 10% and your occupancy is still at 90%. In multifamily, what we look for, especially when we're considering the terms of our debt or our financing or a mortgage, is our lenders want to see us maintaining at least a 90% occupancy rate as a steady rate throughout the hold period. So you actually lower your vacancy risk by having more units, and having one tenant move out doesn't really affect your financials as much as it would on a single family property. So there's less impact to the property, which makes it a more stable asset. So another benefit that is often overlooked by investors when they're putting multifamily out of their investment possibilities is that multifamily is highly scalable. That means that it is easier to own 10,000 apartment units than it is to own 10,000 single family homes. So by getting to this scale, you have a lot of unintended benefits or unrealized benefits that you can realize with that amount of scale. So when you buy a single family home, you have to find 100 single family homes in order to get to a scale of 100. With multifamily, you can buy 1 asset or even 2 assets if you're buying smaller assets, and you can have 100 units. So you get the benefit of your lowered vacancy risk and all the other benefits of multifamily in one closing. So expense efficiencies are something that people can really take advantage of with multifamily assets. So what is an expense efficiency? When we're looking at a T12 or a trailing 12, which is the profit and loss statement or operating statement of any multifamily asset, we see the income up top and then the expense down below. The expense ratio is the amount of your expenses versus your income. And usually we want to keep that under, let's say, about 50%. The more you can lower your expense ratio, and meaning you're operating more efficiently and you're cutting your expenses, the better off you're going to be and the more dollars you'll be able to return to your investors. So by getting to scale, what you can do is you can utilize the opportunity to have collective buying or scalable buying. In talking about expense efficiencies, I want to go into a little bit of a deeper dive and give you some more examples of how that can be practically applied to multifamily. So one of the best ways that you can realize those operating efficiencies is in your contract services. So on assets that we buy, we generally will have swimming pools, or there'll be a lot of landscaping that needs to be maintained. And remember, these are the curb appeals that your potential residents and your current residents are seeing. So you want to make sure, there's a little lipstick on the property and it looks nice. So what we can do is when we get into high scale, even within a submarket. So for example, last year we bought about $160 million of assets in the Atlanta submarket, and the properties are all in a small, close cluster. We're able to go to our pool contractor and say, hey, now that you have X amount of units, instead of just 200 units or 100 units, you have 500 or 1,000 or 10,000 or whatever that number is. We want to get preferred pricing. So not only do you get better pricing, so your expense ratio lowers and you have more operational efficiency, but you also end up with better service because now you're one of their biggest customers and they're always making sure that they're servicing you first and better. That also applies for landscaping contracts, for example. So our landscaping contracts, we can now order flowers or mulch in bulk and we can realize price saving there. And because we're working with the same vendors, they know us, they know we're repeat customers, and they know that we have a lot of scale. So now they'll come in and they'll do it at a lower pricing. Another spot where that doesn't show up on your T12 or the trailing 12 profit and loss operating statement, whatever you want to call it, is in your CapEx, your capital expenditures budget. So for example, let's say part of your business plan is to paint every unit from white to gray. In doing that with a vendor where you're highly scalable, instead of them coming and bidding you on one apartment unit, they're going to be bidding you on 500 at a time or 100 at a time, or however many your business plan is. They know that they're getting repeat consistent work. So oftentimes they'll put a dedicated crew who will be much faster because they already know the property. They already know what they're doing. It's rinse and repeat, but also they're going to give you better pricing because you're giving them scale of business. So it's a bulk discount and it really affects your bottom line. And when your bottom line goes up, that's when you can return more dollars to your investors. So now let's talk about number 4, which is how tax efficient multifamily is. And by the way, if you're getting as excited about multifamily as I am and you're falling in love with it as much as I love it, make sure you stay tuned till the end of this video so you can find out how to get involved. Let's talk about the tax efficiency of multifamily. So in 2022, this is actually the last year that we get to take advantage of what's called bonus depreciation, meaning that we can accelerate our depreciation 100% this year, and this is the last year. So in 2023, it's going to start decreasing and stepping down. So next year it's going to be at 80%. The year after it's going to be at 60, then 40, then 20, until it eventually phases out. So this year is a very exciting and big year for multifamily, not just because of all of the other benefits, but because this year it's highly tax efficient compared to what it will be in the next few years. So because these assets are so big, we are able to utilize what's called cost segregation studies. So we employ third parties to come in, they're experts, and they will go through and they will allocate the asset to whether it's a tangible property like FF&E, which is furnitures, fixtures, or they will assign it to land value or building value. And based on which category they fall into, we can depreciate it at different accelerations or over the full life of the property. And what happens then is all of your returns are essentially tax efficient. Now, of course, there are different rules and regulations, and everybody should consult with their own tax professional for their tax situation. But generally speaking, multifamily is one of the most tax efficient investments that you can make. So the 5th reason why I love multifamily real estate is the one that everybody is the most intimidated by, because they always wonder, how can I pay for this? I can't buy an $80 million building. I can't afford that. But we're going to talk about the ease of financing. So contrary to popular belief, the financing piece of a multifamily asset is actually much easier than underwriting and financing a single family home. I know it sounds crazy, but here's the thing. When you're underwriting a multifamily asset and when you're trying to finance a multifamily asset, your lender is not going to look at Veena Jetti as the borrower and say, okay, Veena, can you afford an $80 million property or not? What they're actually going to do is they're going to look at the property and say, okay, 123 Main Street. can the business of the property support the debt that we're going to give the property? And when I go to buy a personal home or a single family home investment, the bank is looking at me as Veena Jetti and saying, hey, Veena Jetti, do you have enough income, enough credit to be able to afford this house? So the financing piece of multifamily assets is much, much, much easier because it's based on the income of the property, the business operations of the property. So if the business of multifamily assets are doing well, then the lender feels more comfortable giving you debt on that property. And we'll talk about it in another video about cap rates and NOI and how to calculate these things and how to understand DSCR. And if you don't understand any of those terms, don't worry, we'll get into them in much more detail later. But if you want to learn how to get started, make sure you join me in the rest of this video to find out more. So the sixth and my absolute favorite reason to invest in multifamily assets is because it provides passive income. And a lot of people think, okay, Veena, but it's not really that passive because I still have to do things. But no, because being invested into multifamily assets passively as an LP or a limited partner gives you the opportunity to really make the investment and then forget about it. So some of my investors, once they wire the funds and they start receiving their monthly deposits, they never open my emails again. They don't look at the updates. They don't look at the financials. So you can be as hands-on with your investment as you want. If you want to be purely passive, all you need to do is find a sponsor that you know and trust and invest with them if they share your same investment philosophy. And that part is what the most work that you have to do actually is just finding the sponsor, finding the deals that align with your portfolio, your risk tolerance, what you're looking for, and what you want to be invested in with your time frame as well. So you can be truly, truly passive. We like to call it mailbox money. It really is mailbox money. You don't need to know about DSCRs and NOIs and T12s. You don't have to worry about any of that if you want to be a completely passive investor or a limited partner in these deals. So that is what makes multifamily absolutely the best investment class. I passively invest into other people's deals so that I don't have to worry about managing a deal in a market I don't already operate in. So there are a lot of ways to be involved in multifamily. You can get involved too. And it is absolutely my favorite asset class for so many reasons, but these were the 6 big reasons that we loved it. If you're interested in learning more about multifamily investing, what your options are, the different ways you can get involved in multifamily investing, click the link below. I want to show you how you too can have this as part of your portfolio. It's obviously my favorite asset class, and I think that you'll enjoy having it as part of your portfolio as well. So make sure you click the link below to join me and learn more about how to invest in multifamily real estate. If you enjoyed this video and you want to learn more about how to invest in multifamily, make sure you subscribe, ring the bell, and check out my next video.